Success is a beautiful lie. We see the headlines, the stock prices, the billionaire founders, and we assume it was inevitable. But here's the uncomfortable truth. Some of the world's most powerful companies were built on billion-dollar mistakes. Not small missteps, not harmless experiments. Most people won't comment. If this surprised you, type what shocked you the most. Like it so this story doesn't die here. Subscribe, because the next one will hit even harder. Here's the twist. Without those failures, these companies would not exist the way they do today. The problem is simple. We study success, but we ignore the wreckage that made it possible. In 1997, Apple was 90 days from bankruptcy. Cash was drying up. Products were confusing. Leadership was fractured. Investors had lost faith. The world believed Apple was finished. When Steve Jobs returned, he didn't chase innovation first. He cut nearly 70% of the product line. He eliminated distraction. He simplified the company to its core. Failure forced clarity. Now look at Amazon. In the early 2000s, after the dot-com crash, Amazon lost billions of dollars. Critics called it reckless expansion. Warehouses were built, logistics networks expanded, massive infrastructure investments were made while profits were thin. But buried inside that spending was something bigger: infrastructure. What looked like loss was actually positioning. Then there was Netflix. In 2011, the company attempted to split its DVD and streaming services. Customers revolted. The stock crashed nearly 80%. It looked like a strategic disaster, but internally, the data was clear. Streaming was the future. The backlash accelerated the transformation. Here is the hidden pattern. Failure at scale creates intelligence. Intelligence creates leverage. The companies that survive billion-dollar mistakes are not lucky. They build systems that learn faster than competitors. Most businesses optimize for quarterly earnings. The winners optimize for control over future markets. Apple built an ecosystem. Amazon built infrastructure others now depend on. Netflix built data dominance. These were not random pivots. They were calculated evolutions funded by expensive lessons. Failure only becomes fatal when ego protects it. The strongest companies kill their own weak ideas before the market does. They treat loss as tuition. Behind every trillion-dollar valuation, there is a graveyard of costly mistakes. The difference between collapse and dominance is not avoiding failure. It is converting failure into intelligence. The most dangerous moment for any company is not failure. It is comfort. Because comfort slows adaptation. So the real question is this. If billion-dollar companies require massive failures to grow, what does that say about how we approach risk? Do we avoid mistakes to feel safe? Or do we design systems that learn from them? Most people won't comment. If this surprised you, type what shocked you the most. Like it so this story doesn't die here. Subscribe, because the next one will hit even harder. History shows something powerful. The road to dominance is rarely clean. It is calculated chaos. And sometimes, the most expensive mistake is the investment that builds an empire.